Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of Wall Street. Today we're diving into a Form 8KA from Vivakor Inc., a company that's trying to strike gold or maybe oil in the energy sector. This report is like a messy desk. Things are not where they are supposed to be and need to be corrected and clarified. Let's clean up the mess, find out what's going on, and if there's a treasure hidden inside. The company had to amend or correct a previous report because it got some details wrong. Vivakor initially said some stock was issued to Clearthink Capital, but it turned out the shares actually went to Decoding Partners, LLC. They also had the wrong dates for when some of these stocks were issued. Oops, so they're issuing this amended report to fix those mistakes. First up, Vivakor hired WSGS, LLC as consultants to help manage their new, bigger business after they bought some other companies called the Endeavor entities. They'll pay WSGS up to $1.3 million each year in shares of Vivakor stock. WSGS' main person used to work for another company, Empire Diversified Energy, that Vivakor was planning to merge with, but that deal hasn't happened yet. The person from WSGS is also an investor in Vivakor, so there is a lot of overlap in relationships here. Next, there's a side letter or an extra agreement with Tyler Nelson, Vivakor's chief financial officer. This agreement clarifies a few things in his employment contract and a promissory note, which is like an IOU that the company gave him. Basically, Mr. Nelson's employment is now with Vivakor Administration, LLC, a subsidiary of Vivakor, but Vivakor still guarantees his payments. The company also extended the deadline to pay back the promissory note and added a 5% fee because they didn't pay it on time. They also clarified that Mr. Nelson won't have to pay taxes on the money owed to him until he actually receives it. Vivakor also hired Andre Johnson as Vice President of Human Resources. He'll be paid $180,000 per year until the end of December, and then it goes up to $200,000 starting in January the following year. He's also getting $75,000 worth of Vivakor stock each year, given out in quarterly installments. Plus, he got a one-time signing bonus of $250,000, also paid in Vivakor stock. There's a catch though, he can't sell these shares for 18 months. Moving on to stock issuances, Vivakor bought a bunch of companies called the Endeavor entities. The purchase price was $120 million, and they paid for it with a mix of Vivakor stock and preferred stock. James Ballengee, who is the chairman, CEO, and main shareholder of Vivakor, owned the companies they bought. The company already issued 6.7 million shares of their common stock, then later on they issued more shares. These stock issuances didn't have to be registered with the SEC because they were made to people who are familiar with the company's operations, like executives. Vivakor also issued some shares to Ballengee Holdings, LLC, which is owned by the CEO, and to Justin Ellis. These shares were issued in connection with convertible promissory notes, which are basically loans that can be converted into stock. The company issued shares to these individuals. And here's the correction we talked about earlier. The company issued shares to Decoding Partners, LLC, not Clearthink Capital, LLC, to pay off $180,000 in outstanding invoices. Vivakor filed a certificate of designation for their Series A preferred stock. This document outlines the rights and preferences of these shares. Before this, the company had 15 million shares of preferred stock authorized, but none were assigned to a specific series or outstanding. Vivakor issued shares to James Ballengee, the CEO, for his work. The shares were issued under their equity incentive plan. The company owes Mr. Ballengee additional shares for his employment period to be paid in quarterly installments. Under Tyler Nelson's, the CFO, employment agreement, he's due bonuses. These bonuses are for hitting certain goals and for the close of the acquisition of the Endeavor entities. Mr. Nelson is supposed to receive these bonuses in shares of common stock. Vivakor issued Mr. Nelson shares of their common stock after withholding taxes. So what's the story here? Vivakor is a company that seems to be making a lot of moves. They're acquiring other companies, hiring consultants and executives, and issuing a lot of stock. This flurry of activity raises a few questions. Are these acquisitions strategically sound, or are they just growing for the sake of growing? Are these stock issuances diluting the value for existing shareholders? On the one hand, Vivakor seems to be positioning itself for growth in the energy sector. They are bringing on experienced people and expanding their operations. On the other hand, there are some risks. The company has a lot of debt, and they are relying heavily on stock issuances to pay for things. This could put pressure on the stock price if they're not careful. Ultimately, Vivakor's success will depend on whether they can successfully integrate these acquisitions and generate profits. Keep an eye on their future filings to see how these moves play out. Thanks for watching. If you enjoyed this corporate decoding, be sure to like, comment, and subscribe for more deep dives into the world of business and finance.